What's up, guys? This is Carter Thomas with Coin Mastery TV Bloodbath Edition. Make sure you go to coinmastery.com/Bitcoin. If you are just getting into crypto, if you want some direction on how to buy your first fraction of a Bitcoin or any other coins, this is a really helpful resource. It's all free for beginners. And also, if you guys know anybody, any friends or family that wants to get in, I would say the next 24 to 48 hours is a very good time to get into crypto. So send them over. It's completely free. There's no catch or anything. coinmastery.com/Bitcoin. And today what we're talking about is this nice little red candle. Big, I shouldn't say little, it's pretty big actually. That's been going down. We're going to talk about how that relates. We're going to look at Litecoin a little bit. We're going to talk about altcoins. And we're going to talk really what you care about, which is why this is happening, and more importantly, what you should do about it, or what some options to do about it, right? None of this is financial advice, none of this is professional advice. This is just what I'm seeing, how I'm viewing all this. And what I really want to get into is not only what's happening right now, but a little bit of the bigger picture. I was at a really great conference yesterday in San Francisco, and I heard some really great speakers. I met some of you guys, some viewers who were there. It was just awesome all around, but it gave me a really good perspective on what we're looking at right now as it relates to price, which I think will help you guys a lot. And I'll give you a little bit of both perspective and a bit of, just a different view of all this. So we're looking at Bitcoin, obviously, and what I think the first thing that you want to remember on days like today. So obviously price, and you check your blockfolio and you have your morning panic attack and you feel stressed out and you can't concentrate on anything. I get it. And what you realize, just slipping over to coin market cap, is that even after this massive alt run, even after we're seeing the dominance of Bitcoin, it was dropping for a while. Now it's coming back up. What you realize is that no matter what happens in altcoins, Bitcoin is still the king, the queen, whatever you want to call it. It still runs everything. And there's no getting around that in terms of how price of the crypto market depends on Bitcoin. Now, the reason why this matters to you, this is what we've been talking about for the past few weeks, is that as you build out your portfolio, you want to have that allocation in mind. Now, today, there's probably not a whole lot you can do about it other than just add more Bitcoin to your portfolio, right? Often the initial reaction is, oh, I'm going to go buy some altcoins because they're going to potentially bounce back the most. And that may be true, but the larger, bigger strategy is to realize that, hey, you may have just realized that you are heavy on altcoins, or you're not heavy enough on altcoins or whatever, and that you should buy not necessarily what's going to serve your needs in the short term, aka what's going to make you the most money right now. You should potentially try to buy into what's going to give you a more balanced viewpoint. And often that comes down to having much larger allocations of bigger, more boring coins. And we're going to talk about why later on. And I think that this is something that is easy to forget, but I think is very, very helpful. So more practically, more immediately, I should say, we'll look at the 4 hour. If we look at the 1 day, obviously the 1 day is not going to be that helpful right now because this is still an unfolding candle. So you can see that there's not really a wick, right? The whole candle is pretty much filled out, which means that we are at the bottom of the price. We haven't had any retracement yet, which is why you want to go to a 4 hour, maybe even a 1 hour on days like today if you're really looking for where the levels are going to bounce. And on the Fibonacci, which we've been looking at, I don't know why that's not, there we go. We are at the 0.61, the 61% retracement level. So we blasted right through that 50%, which is what we were watching. And like we talked about yesterday, if it broke through that 50%, it was going to break hard. And that's typically true in any sort of quasi bear trend that's happening right now. It depends on which channel, right? Like there's two channels that are going on. There's a long-term up channel, and then there's the down to the right bear channel. And as this extends, that bear channel gets stronger, it becomes more of a bear trend. That's how you analyze these charts. And so as it's doing this breakdown through the 50%, that just gives it more ammunition that this may be a longer but more powerful, accumulation / horizontal phase as it relates to Bitcoin. Now, the other thing is that this volume is not like the highest it's been. So we often talk about on days like today, not only look at your price, but the volume is really important on these. And it's not as high as others, but realize that the all-time high in volume is really only needed for determining change in direction. So the support, the volume is high enough to really support at a level like this, meaning it may find a lot of resistance or support, I should say, at 11,100-ish on Coinbase as I've drawn this. But it may not bounce right back up because there's not a huge spike in volume. If we saw volume up at these levels, right around early December levels, we could easily see a jump back up. And that's what you see anytime you see something pop back, you see a huge spike in volume. So we're going to keep an eye on the volume, but if it doesn't pop, this won't spike back up. So I don't expect prices to necessarily, on Bitcoin at least, to spike back up. So overall, this is not, to me, a buying opportunity yet, because you want a confirmation on the trend, on what's happening with the price. And as it stands, you can drill into the 1 hour and try to get some confirmations, right? If you really get into the candles, but this is just so choppy, right? And the volume is really all over the place. I personally am going to wait until I see some sort of, bullish engulfing candle or something on at least the 1 hour, but really the 4 hour, and hopefully the daily candle, before I start to dump any more fiat into Bitcoin. I'll be dollar cost averaging, but this to me does not signal a huge buying opportunity quite yet, but we're keeping an eye on it. All right. Now, Litecoin's the other one, and you can see that a very similar thing is happening. It blasted through that 50%. Now it's on its way down to the 61. You're going to see a similar situation where you're going to see this volume start to increase as we hit that next level, and we're going to go from there. Litecoin has this at the 61%, this previous resistance you can see. So this is going to be a critical moment. It depends on how fast it gets to this. And then if that doesn't hold, this next level is going to be, it's going to drop real fast, or really hard, I should say. But there's a ton of support down here at the 93 to 100-ish buy zone. I would be very surprised if it went below that unless some external circumstance happened. So, we still do have, on the USD chart at least, we still have this area of the chart that needs to get filled in. It looks like this wick probably didn't, it wasn't enough for the chart structure to fill in this bull run right here, meaning Litecoin is probably going to keep dropping down to 170-ish. It's probably going to find some resistance the same way Bitcoin did. And then if it breaks through that, next stop right around 100. But the good news is after that, very, very unlikely that it would continue to drop down. There's going to be a lot of support at that level. So, take it for what it is. Obviously, this could all change, and that's just the way I'm playing it. I get that this is a big candle, but it's just not, this doesn't look like the bottom to me yet, both from a chart standpoint and just from watching people on all the social networks. And, people aren't just terrified. If you guys have been watching, July was the first big one, and then there was probably 3 or 4 other real drops that happened, and we talked about them coming in waves of 3. And I think it's really important for one, on days like today, and we'll talk about this in a second, how people are constantly trying to find out why this is happening. Because the more certainty you have, certainty gives you peace of mind, right? That's what control is. Anxiety is a feeling of lack of control. And so the more you can put certainty on it, the more you feel like you're in control of what's going on in your surroundings. But I think what happens with any of these coins is that you can't really, you can only control what your reaction is. You can't really control what the price is going to do. And so when you're looking at the altcoins, similar situation, things are dropping. I would look at the charts on any of these. I think you're going to see the coins that are over, like their prices are way above where they should have been anyway, are getting hammered. And the coins that their prices may have been closer to what the market, what the real price discovery would be, are not getting quite as hammered. But overall, this is just Bitcoin's game. So, I mean, I don't know what to tell anybody if you're freaking out, then you're freaking out, and you should accept that and just do your best to observe what's happening right now. And like one thing that I've talked about and that I would continue to talk about is this idea of always trying to outsource yourself. If you're freaking out right now and you've already sold a little bit, or you made a bad decision, or you're doing something that is not a smart move, use that as a data point. Don't use that as a way to, self-judge yourself or whatever. It just happens to everybody. It happens to the pros. It happens to the newbies. Everybody is susceptible to this. That's why it's so hard to be consistently good. One chart I thought was really interesting is Crypto Orca. I don't know Crypto Orca, but he posted this, and I've always been really fascinated with how Bitcoin relates to gold on the charting standpoint. And if you look at what he posted, this is gold's chart, but this is over a course of years, right? So we're going back from 2000 to 2018. And isn't it unbelievable? This looks exactly like Bitcoin, right? And so the first chart right here, you can see this is gold, and there's a 45% retracement. And you look over here at Bitcoin, and we've got a 45% retracement. Now that may have changed now because we're getting this is going to unfold over the course of the day. But it's really interesting how the market is treating these assets, both of which do not have the ability to necessarily put a fair market price on it. There's a bit of speculation built into everything, meaning gold has an element of, hey, it's worth what it's worth, and we're going to justify it because of jewelry prices and because of electronic integration. There's ways to justify it, but that's the same thing that happens with Bitcoin, where it's, hey, here's the price that the market set, but let's justify it because of transaction volume and because of network capitalism and all. We kind of apply new valuation metrics to it. And I think that this, to me, just looks at more of like a speculative charting exercise. So you look at gold, you look at Bitcoin. I do not know if this is what's going to happen with Bitcoin. But if I had to guess, this is about as close as I could anticipate Bitcoin's future price. And I don't try to predict it. I just try to react to it. So you can see that if this does happen, we'll probably have a little bit more of a downswing, right? We may get down all the way down to 10,000 area, especially if you scroll out here. This chart will fill in a second. We could get down to 10,000, maybe even lower, but there's going to be a lot of support there. And it's probably just going to form itself out. If it went down to the 7, 8, 9,000, then you would really get the similar gold structure, but we're going to go from there. So something to think about. I think it's just a really good data point. Now let's get into the macro a little bit. Not even the macro, I guess the news and the macro. And the one thing I would say on days like today, and this is just my experience, guys, I do not consider myself some sort of expert on anything. I'm trying to get better. I'm trying to learn. I'm trying to share my findings. But it seems like everybody, both on the news and in the community, every investor, there's 90 million different theories about why this price is happening, right? So it's all the way from, China, right? There's all these things coming out of Asia. China and South Korea are coming back and saying, hey, actually, we might ban stuff. And there's kind of a backstepping, or what do you call it? Taking a step backwards and saying, actually, we're not going to be as nice about this as we've previously thought. It's causing some fear. There's a lot of talks about how the futures contracts are rolling over into the new futures contracts at the end of this month. If you didn't see, I posted on Twitter. I thought that futures contracts expired on a particular date, the same way that strike prices happen in options, right? Meaning you bet on a price on a particular day, typically the third Thursday of every month, And that's the strike price that you're betting on the option, meaning you're betting it's going to be above or below that price on that particular date. Futures are different in the sense that if you have a contract, it rolls into the next month. And so you can hold a futures contract and it'll just continue to roll itself into the next month. There's no like expiration. It doesn't lose value the way options do, which is why it's kind of in the middle between holding a long or short, or like actually holding the position of the asset, and options, which are holding like massively leveraged like options to buy the contracts. Futures are an actual asset contract. Is just betting on a future price. So anyway, there's that. There's some talk about someone posted on Twitter. Who was this? Coin Prudence. I don't know who you are, but I've seen this. A bunch of people have posted this sort of thing where there's Chinese New Year coming up, is it Asian New Year, Chinese New Year, and there's always a big dip, like I guess 24 or a couple weeks before this happens historically. And I think that what this all means to me is that nobody knows. Nobody has any idea. And you got to ask yourself, like, what does it even matter if you did know exactly which one it was? Like, what would you do differently than what you're doing today? And if the answer is you would do something dramatically different, other than, if you found out that there was some huge opportunity that you could arbitrage because you knew the future, that's one thing. But if knowing for sure what the news is would change the way that you react to the market, that's a problem. That's a weakness in your strategy. You really want it to be that it doesn't matter what happens in the news, you have a plan and or a set of portfolio options that you can deploy if you would like to. And, a vast majority of people watching this and listening to this shouldn't do anything today. Maybe you want to buy a little bit if you want. There's some huge opportunity with fiat, you can buy in some. But even if this goes right back up, it's not the missed opportunity of a lifetime. If it goes way back, keeps going down, you still have another opportunity. Like the first big kind of like, oh my gosh, is rarely the big opportunity. It's usually the two or three that come after that for like the big wins. So I don't know. I would, measure twice, cut once type of situation. Measure 5 times, cut once, and try to keep the news to a minimum. Try to keep the negative inputs to a minimum. These are good days to delete your Blogfolio app, to not check CoinMarketCap if it affects you, right? If you have an emotional reaction to it, and I can tell you, having an emotional reaction to a price is a very good indicator that you are over leveraged or overexposed in that asset class. If you are opening up CoinMarketCap, and you're looking at this and this is causing you deep stress or deep anxiety or whatever, that is a very important, you need to listen to that, and you need to change. You need to be able to make a plan. Not that you're going to execute it today, but as things lighten up. Because one thing I can tell you, and mark my words on this, this is a promise, that whatever you feel right now, if this price goes down, so let's say you own Cardano and it went down 26% today, the stress you feel today will pale in comparison to if this happened on like April 14th, the day before taxes are due, and you need money, or if this happened and the stock market went way down and your job is kind of, you're on the fence about whether or not you're going to still have your job, or you're losing clients or whatever. So you gotta put yourself in the control of the situation. Otherwise, these markets are just going to eat you alive. It's impossible, because humans are built to survive. That's what we've evolved to do. And your brain and your body will translate this into survival mode. You need to survive through it. Nobody makes good, logical, strategic decisions when they're trying to survive. They make decisions that will save them in the short term. Get out of survival mode. Got to do it. All right. This is a couple slides or pictures that I took yesterday at the conference. Really great conference. Thanks to the team at WCEF for hosting me, and to everybody that I met. It was great chatting with all of you. Jeremy Gardner gave a really good talk. If you guys don't know Jeremy Gardner, he was one of the founders of Augur and of one of the big blockchain capital, or one of the big crypto hedge funds. He started that. He's big into the hedge fund world. I think he's launching new funds. Really smart guy. He's done very well in crypto. One of the kind of leading crypto people. And one thing that I took away from his talk, and then also a few other guys that were very smart, Joey Krug and Spencer Bogart, a couple other like high-level investors, developers. One thing that's I find so helpful to go and hear these guys talk and to be around them and meet them is their overall picture of the crypto ecosystem and how early they still think this is. And I tend to agree with them. And it's easy to get caught up in things like, oh, are we in a bubble? What's going to happen? What's the price today? Am I making money? Am I getting rich? Whatever. Like, I'm not downplaying any of that. It's just that when you go talk to these big guys, the people that are really into this space, that build the stuff, they're really talking about how we don't even know what the blockchain or what the protocol is going to be. Like, we're still figuring that out. And it's like in 1989 or 1991 saying, okay, what's the internet going to be built on? Or what are the things that would make an internet being built on? Like that, those are the questions that they're asking. And it's easy to think to yourself, well, all right, well, they've all made like $100 million each. So US dollars, or however you measure your wealth. And so easy for them to say, and they don't need to worry about making money and paying off student loans. But you also got to realize that it's because they don't have that stress of price that they can see the bigger picture, that they can open themselves up to what would be the vision. And often that is what is required for the progress to happen, the innovation. So even if you aren't like them, even if you don't necessarily connect or understand them, it's important to listen to people who are deep into the space, especially developers and engineers and people that are blockchain enthusiasts, as well as investors, because it all comes together as in a very unique way. Now, the reason I'm telling you this is because, one, they're very kind of early in all this, but as you are thinking about what you should be buying, what your portfolio should look like, that's the question that you should be thinking about is what is the future going to be built on? Is it going to be built on Ethereum? Is it going to be built on potentially Bitcoin with things like Lightning and atomic swaps that could, rootstock or counterparty? I mean, there's protocol layers on top of Bitcoin, but is it going to be built on Cardano? Is it going to be built on Neo? I mean, or is it going to be built on all of them? Right. And that's the big bet. And I think a lot of us, myself included, forget how big of a deal that is. So we may look at something like, I think Ethereum is a good example because these guys are all Ethereum bulls, even though, I mean, I like Ethereum, but I don't love Ethereum the way these guys do. And when you hang around, when you hear these kind of conversations and you really see and you really get the idea of the protocol layer driving everything, and you look at something like Ethereum at $1,000 and you realize like this is the beginning of this is earlier than early, both maybe in terms of price, but just in terms of technology and use cases and everything. Even if we're at whatever $600 billion market cap. I mean, what is it now? 550, all right? So we dropped a lot. But I think that is such a critical moment. So for you guys, as you are, one prediction I made at the end of 2017 is I believe that a massive amount of growth is actually going to come from like the top 20, 30 coins, specifically through protocol layers. And I would really, really, really encourage you guys not to not to write off these protocol layers. And protocol layers being coins that you can build on top of, right? An obvious way to look at that is what coins are having ICOs done on top of them. And the more you have these protocol layers in your portfolio, that is a very, very good long-term bet, because the one or two that do win big are going to win so big, it's like bigger than big. I mean, astronomically big. And I think that was a big takeaway I took at is looking at something like, Neo. I mean, talked about Neo yesterday, or even Stellar. They're doing a lot of, or EOS. You can just go through the list. Quantum, Qtum, whatever you want to call it, Ethereum. Protocol layers are still have a huge upside. It just won't be the fast money. It's going to take a while, but it's going to be massive. Like, you're talking about 100, 200x. Protocol layers easily still have that. So I thought that was super helpful, or super insightful for me. I wanted to share that. He talked also about utility tokens, which I'm not showing right now. Utility tokens being on top of protocol layers, specifically usually through dApps. So when you look through your portfolio, a majority of people have utility tokens, things that are built on Ethereum that do have, some particular use case. I mean, if we just scroll down here and you look at something like, Substratum, right? That's a decentralized internet thing. And I don't know nearly enough about Substratum to be able to give you any sort of insight on it, but that would be a utility token, right? I shouldn't say that. I don't know enough about Substratum to be able to make that claim. But 10x, that's a good example, right? It's a credit card on top of, I believe, Ethereum, and it's a credit card and all that. That offers some sort of utility using the protocol as a layer. And pretty much across the board, all these investors, all these kind of, I would say, OGs in the, like the real OGs, the engineers, OGs, they're all very skeptical of utility tokens right now because nobody knows what the protocol layer is going to be, the winner of the protocol layer. So if Ethereum doesn't win and you built your utility token on top of Ethereum, you've got double risk. If Neo doesn't win and you've built your company on Neo, same problem. I mean, potentially you could port it over, but probably not. I mean, that's just the way the tech works. So utility tokens are still pretty speculative, especially when you get into the ICO world, which is when you start asking, like, does this utility token, is it even required? Do we really need a token? And the third thing that Jeremy talked about was security tokens. And this is something that I have not looked at nearly enough, and something that I will be focusing on over the course of this year. So T0 is actually, in part with Overstock.com, which you guys know I bought a bunch of Overstock.com stock a while back. Interesting to check out. Patrick Byrne, the CEO, he's very involved in T0. Polymath is a recent ICO. Templum and Cointopia, I need to check out more. These are two that I'm going to research more about. But these security tokens, in a nutshell, allow anything that's a current security in the world to be tokenized. A security could be a derivatives market, it could be real estate, it could be anything that you can invest in that is on a qualified marketplace, a commodity, currency. I mean, anything can be tokenized. And these tokens are designed for those securities markets. And the securities market is like so big, it's ridiculous. I mean, like hundreds of trillions of dollars. Huge. It's as big as it gets, other than currencies, I guess. And these guys were really bullish on, no pun intended with Polymath or anything like this. So this is a category that you should all check out. And I'm not entirely sure which one of these is going to win, or if any of these are going to win, or what's going to happen. I don't know even if you can buy any of these quite yet. But this is something that I took away from this, was like, this was super interesting. And then he put up this really interesting matrix. Again, this is not mine. This is Jeremy Gardner's, but a picture of it. And you can check this out, where it was high risk, high reward, a risk reward chart. And he talked about high risk, high reward, and how ICOs and utility tokens are in the high risk, high reward not unsurprisingly, high reward, lower risk protocol tokens. And I think that you're going to see this is where the shift is going to happen over 2018. A lot of people ask me, I mean, yesterday we had a great conversation with some of you guys, but just emails and online and stuff. People always ask me, what's going to happen? Are we going to crash? Whatever. And my answer is pretty much always the same. It's just that all of this high risk, high reward, the utility tokens, ICOs are all just, the money is going to flow into the protocol tokens over the course of the next year or two. And it's going to flow into the winners, right? These ICOs, these utility tokens are just going to keep getting recycled until the protocol tokens figure out who's going to win, or at least who the winners are going to be, maybe the top 5 winners or 10 winners. And until we have an established protocol that does win, the utility and the ICO tokens are never going to be long-term investments. They're always going to be, you're chasing money. That's what we talk about. The altcoins, the ICOs get you rich, but the protocol tokens, the big coins, are what get you wealthy. This is a good example of why. And then on the low reward, but still on the risk profile, is things that are funds, right? Being able to do index funds and being able to tokenize, some sort of blended return, which for the most part is just a way to kind of monetize risk or monetize de-riskification, if that's a word, or whatever you want to call it. And you'll see these pop up, right? You're going to continue to see these pop up, but really it's just, it's an easier way to buy into this ICO utility token, protocol token bet. So my big takeaway for anybody who's interested is that you should not underestimate the returns you can get on these protocol tokens over the long term. Everyone's chasing 100x in 2 months right now, and that's fine. I don't care. I mean, do what you want. But do not underestimate 100x over 5 years, because it could easily happen. Even if it feels like this is already so big, it's not. This is nothing. We are just this is the beginning of the beginning. We're still figuring out which protocol is going to win. So build out your portfolio. If you do have ICOs and utility tokens, that's fine. And maybe a couple of these turn into protocols. I mean, plenty of these ICOs, some of these new blockchains come out and they become protocols. That's how you get 10,000x return. But the chances of that happening are very, very slim. And so protocol tokens, I think, are really, really smart. The other takeaway, kind of a side chat I had with a friend who is an incredible businessman and been very successful. And he brought up a really good point where that's going to change the way I start to look at different investments. Is he's saying, when you look at tech, when you look at the internet and what built the internet early, the big winners early were not B2C companies. They were not customer or consumer facing companies. It was all B2B. That's where the tech was. So things like Oracle, Sun Microsystems, all the big ones that really built the infrastructure that then allowed things like Google and Facebook and MySpace and YouTube that allow that all to happen. And we are still in an environment where B2B is where the real opportunity is, in his opinion. And I actually tend to agree with him. I think that the more I look at coins, the more I start to hang out and talk to people that are at the top and the bleeding edge of crypto, the more I find that protocol tokens are the way to do it, and investing in B2B solutions, right? What's solving corporate or business problems using the blockchain, as opposed to something, not to pick on 10x, but 10x requires customers to use it. And we all know that people are walking around every day and they're going to you saying like, well, how do you even spend a Bitcoin? I'm never going to use, is this going to replace cash? Because blockchain is not a consumer product. This isn't a consumer thing. This is still a protocol and a B2B thing. So I'm going to start looking at a lot of these, any coin that I have that's not a protocol, especially like any sort of utility. I think Chainlink is a good example. I own a bunch of Chainlink, or some Chainlink, not a ton. But that's interesting because that's a pure B2B play. I do not know if Chainlink is going to do well or not, but comparing that to something like a 10x, which does require consumer usage, that gets much more interesting to me now that I talk to these guys who are, I mean, they were in the tech world, or maybe not some of these blockchain guys, but some of these investors, they were in the tech space in the 90s, in the 2000s. They watched it get built, and B2B protocol and B2B was where the big wins were, and like they continue to be the big wins. And then the consumer ones were the fast, huge, hot money, right? The Googles, the Netflix, the YouTubes, Facebooks, all the ones that, more the venture capitalists came in, and like that's the flashy ones that went huge very quickly. So anyway, I thought that I just love going to conferences. I love meeting people like you guys who I met, and I love getting my mind changed, because I know I'm not right about most stuff with crypto and investing, but I do know that the more I'm willing to be open to new ideas, the better I do in a market. Because the second you get an ego in the market is the second you just get completely hosed. Unless you have something like that beats the market, whether it be better information or you can control something. Like that's the only reason why having an ego is good. But that's just going to go away as the market gets more competitive. So I think that it's always good to just go and have an open mind, listen, and let people change your mind, or at least give you data that may be uncomfortable, may not be what you want to hear, but it may be good advice. So I think that's that. I think that's it. I mean, that's really what it comes down to. Look at this. We're going to test this line. We're at 11.2. This is kind of a make or break decision. I'm going to leave it there because we'll have a nice little cliffhanger. Tomorrow we can regroup and check this out. Again, for vast majority of people out there, don't do anything today. Just close your computer, chill. It's going to be fine. Don't worry about it. All right. It's always great chatting with you guys. I will catch you tomorrow. Peace out.